The world's most powerful nations are plotting to destroy the US dollar. Right now, China, Russia, India, Brazil, and their allies control 45% of the world's population and over 35% of global GDP. They're building parallel payment systems, trading in their own currencies, and some are even discussing a new global currency to replace the dollar entirely. This isn't some conspiracy theory. It's happening in real time. Russia and China now conduct 95% of their trade without touching a single dollar. Central banks are dumping US treasuries and buying gold at record rates. The freezing of $300 billion in Russian reserves in 2022 was the wake-up call that sent shockwaves through every capital from Beijing to Brasilia. But here's what nobody's telling you. This grand plan to dethrone the dollar is already dead. Not dying, dead. The BRICS nations have fundamentally miscalculated what it takes to replace a global reserve currency. They've confused political theater with economic reality, and the very structure of their alliance guarantees its failure. Today, I'm going to show you exactly why the dollar will remain king, why the BRICS challenge was doomed from the start, and what this power struggle really means for the global economy through 2050. I'm James Whitfield from Fault Line Economics. While others chase headlines, we examine the systems that actually shape history, geography, demographics, and economic fundamentals. Today we're analyzing the BRICS de-dollarization project. This is strategic clarity in a complex world. Let me paint you the strategic picture. The BRICS bloc, originally Brazil, Russia, India, China, and South Africa, has now expanded to include Egypt, Ethiopia, Iran, Indonesia, and the UAE. Together, they represent a formidable economic force that's explicitly challenging the post-World War II financial order. Their grievance is legitimate. The dollar gives America what France's finance minister once called an exorbitant privilege: the ability to print the world's money, finance massive deficits, and most critically, weaponize the global financial system through sanctions. When the West froze Russia's central bank reserves and cut it off from SWIFT in 2022, it wasn't just punishing Moscow. It was demonstrating to every nation on earth that your wealth is only as secure as your relationship with Washington. The message was received loud and clear. If America can do this to Russia, a nuclear power with vast energy reserves, what could it do to you? Factor 1. The coalition of rivals. The first fatal flaw in the BRICS plan is that this isn't an alliance. It's a coalition of rivals pretending to be friends. Take the two giants at the heart of BRICS, China and India. These aren't partners. They're strategic adversaries locked in Asia's most dangerous rivalry. They fought wars over their 2,100-mile disputed border. As recently as 2022, their troops were killing each other with clubs and stones in the Himalayas because using guns might trigger a nuclear confrontation. India sees China's port projects in Pakistan and Sri Lanka as strategic encirclement. That's why New Delhi has joined the Quad Alliance with America, Japan, and Australia, explicitly to counter Beijing. How can India create a common currency with its primary military threat? It's like asking Ukraine to share a currency with Russia in the middle of their war. But it goes deeper. Brazil pursues active non-alignment and explicitly rejects framing BRICS as anti-Western. Russia and Iran see it as a battering ram against US hegemony. India maintains its strategic autonomy by buying Russian oil while purchasing American weapons. These aren't policy differences. They're fundamental contradictions in worldview. Factor 2. The Chinese domination problem. Here's the economic reality nobody wants to discuss. BRICS isn't a partnership of equals. It's China and everyone else. China's economy is larger than all other BRICS nations combined. Beijing accounts for 52% of the expanded bloc's total GDP. Its economy is 4 times larger than India's and 9 times larger than Russia's. Any BRICS currency wouldn't be a neutral alternative to the dollar. It would be the yuan wearing a multilateral mask. Think about what this means practically. A BRICS payment system would run on Chinese infrastructure. A BRICS currency would be backed primarily by Chinese economic strength. The BRICS Development Bank, headquartered in Shanghai with a Chinese president. For India, swapping dollar dependence for yuan dependence isn't liberation. It's strategic suicide. You're asking proud, sovereign nations to hand monetary control to their rivals. Russia might accept this out of desperation, but India, Brazil, never. Factor 3. The infrastructure chasm. Now let's talk about what it actually takes to run a global currency system. It's not just printing money, it's building an entire financial ecosystem. SWIFT connects 11,500 financial institutions across 200 countries. It processes trillions of dollars daily, with 90% of payments reaching their destination within 1 hour. The US Treasury market trades $900 billion every single day, providing unmatched liquidity that lets countries park their reserves safely. What does BRICS have? A concept called BRICS Pay that's been launching next year for 3 years. Russia's mere payment system that nobody outside Russia accepts. China's SIPS that processes a fraction of what SWIFT handles. These aren't alternatives. They're fragments that don't even talk to each other properly. Creating a unified system would require harmonizing wildly different financial regulations, data privacy laws, and technical standards across authoritarian states and democracies, closed economies and open ones. It would take decades and require a level of trust that simply doesn't exist. Factor 4. The trust deficit. And this brings us to the heart of why currencies dominate: trust. The dollar isn't powerful because America has the biggest economy. It's powerful because the world trusts American institutions, independent courts that protect property rights, transparent markets where foreigners can invest freely, a central bank that, despite its flaws, operates predictably. Now look at the BRICS alternative. China maintains strict capital controls. You can't even freely convert yuan without government permission. Russia is under crushing sanctions with a politicized central bank. Iran's economy is a black box. South Africa can't keep the lights on. Would you trust your national wealth to this coalition? Would you price your oil exports in a currency controlled by these governments? The question answers itself. But all of this hinges on one deciding factor: the Triffin dilemma. For a currency to serve as the global reserve, its issuing nation must run persistent trade deficits, buying more from the world than it sells. America has done this for decades, flooding the world with dollars. China's entire economic model is the opposite. It's built on massive trade surpluses, on selling more than it buys. For the yuan to replace the dollar, China would have to completely reverse its economic structure, become a net importer, and accept the deindustrialization that comes with it. That's not a policy change. It's economic suicide for Beijing. Now, let's connect the dots together. What do you think is the real strategic goal behind the BRICS de-dollarization push, if not actually replacing the dollar? Drop your analysis in the comments. I read every strategic insight you share. Here's where it gets interesting. The BRICS plan will fail to dethrone the dollar, but it's already succeeding at something else: fragmenting the global financial system. We're not heading toward a new hegemon, but toward a financially balkanized world. dollar dominance in the West, yuan zones in parts of Asia, regional currency blocks elsewhere. This isn't efficient, but it gives countries options. Leverage against American power without having to fully trust the alternatives. For a deeper dive into how currencies really work and where money is headed, I recommend The Future of Money by Eswar Prasad. Brilliant analysis from an IMF veteran. Free trial available through our Audible link in the description. This connects directly to our analysis of how Russia is trying to survive Western sanctions. Check out that breakdown via the card on screen or link in the description. It reveals another piece of this strategic puzzle. So what does this mean for 2050? The dollar won't be dethroned, but its kingdom will be more contested. Expect the dollar to retain 40 to 45% of global reserves instead of today's 58%. Regional payment systems will handle specific trade corridors. Gold will play a larger role as a neutral hedge. But crucially, when the next global crisis hits, and it will, watch what happens. Capital will flood into US treasuries, not BRICS bonds. Because in moments of true fear, the world still trusts American institutions over any alternative. The BRICS are building backup systems, not replacements. The BRICS challenge to dollar dominance was never about economics, it was about power. These nations aren't trying to build a better system, they're trying to build leverage. They've succeeded in making America think twice about weaponizing the dollar. They've created options for countries that want them. But replacing the global reserve currency? That requires something the BRICS will never have. Trust between rivals, unified vision, and the willingness to subordinate national interests to a collective goal. The dollar's reign isn't ending, it's adapting. And that adaptation will define the next chapter of global power. The future isn't written, but the blueprint is there for those who know how to read it. If this kind of strategic analysis helps you understand our complex world, subscribe to help us create more content like this. Hit the like button if you want to see more deep dives into global power dynamics. Stay strategic.